Hi friends, 2025 is going to be a very different year for your personal investments and wealth because of a number of reasons. Number one, rupee has been depreciating sharply and I've created this full video. Go and watch that video. You're going to learn a lot from a macros perspective. Second, stock market has been under huge pressure in January 2025. Almost 32 lakh crores has been wiped out of the stock market just in the month of January. Thirdly, Trump is going to have a big influence all over the world because of many policies. For example, he's deregulating the US banking system. He wants to drill more and more oil because he believes in the fossil fuels. Also, the Fed rate cut might be paused in 2025. And finally, the budget 2025 is leaning towards consumption theme rather than capex theme. What does all of this mean? This simply means that 2025 is reminding us all over again that diversification is extremely important for our portfolios. So in this video, I'm going to help you understand 5 diversified assets and how you can go about looking at the wealth making opportunities in these 5 assets. If you don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. With that, let's get this video cracking. The first asset I want to speak about is the individual stocks and where is the maximum opportunity in terms of the risk versus rewards. So before I start giving you my commentary, I want us to take a step back and have a look at this chart. What are we going to see here? We are going to see the last 3 years behavior of stock market. In 2022, you will note that stock market was under consolidation. In 2023, we saw the first bull run, and in 2024, we saw the second bull run. So if I put together 2023 and 2024, Nifty 50 went up by close to 43% and more than 20% returns in a year technically is defined as bull run. So I can safely say that 2023 as well as 2024, we witnessed bull runs in both the years. Now comes what is likely to happen in 2025. Of course, I cannot predict it and I do not want to speculate, but I've created a couple of videos on this topic. Main important point you need to understand is that we are unlikely to see a bull run in 2025. Please understand, stock market does not give you bull run every single year. We have seen it in 2023. We have seen it in 2024. It is unlikely that in 2025 we are likely to see a bull run. Therefore, if in 2025 we see consolidation or single digit returns or let's say 9 to 12% of Nifty returns, what you really need to think about is not to chase the momentum in 2025. 2025 is all about value investing. We need to find individual stocks that are at very good valuations. Earning growth is there are the themes that we need to look at. So where are the value buying opportunities? In my view, there are 4 assets that are looking attractive from a risk versus reward perspective, from a value buying perspective. Asset number 1 is Nifty 50. Why do I say that Nifty 50 is a value opportunity in 2025? Because right now at the time of recording this video, Nifty PE ratio is not hugely overvalued. It is trading at around 21. And if you look at the last few years data, last 3 to 4 years of data, have a look at this data. You will see the pink line that is showing the Nifty 50 PE ratio. You will note that whenever Nifty PE ratio has come to 20 or below 21, Nifty 50 has found strong support, meaning that whenever investors see that Nifty 50 has come down to a value that is giving us a PE ratio of less than 21, there is a strong buying in Nifty 50 because it makes Nifty 50 fairly valued overall. Therefore, at the time of recording this video, in my view, Nifty 50 is looking very attractive. I don't know when you're watching this video, but please go and check the Nifty 50 ratio at the time of watching this video. The 3 other sectors that I think there is a huge value opportunity in my view in 2025 is number 1 is FMCG sector, number 2 is auto sector, and number 3 is microfinance sector. Again, I had created this video here where I spoke about why I believe that these 3 sectors in 2025 presents a huge value buying opportunities. And also during the budget day, I created this video where I spoke about how the budget is also pushing the consumption forward. And in 2025, auto, FMCG and microfinance sector in my view is looking very good in terms of the value buying. Now let me know in the comments what is your view on stock market in 2025. Where do you see value coming? And I would be happy to go and read your comments. The second sensible asset in 2025 in my view is fixed deposit. 2025 is possibly the last chance to lock your high interest rate in fixed deposits. The key reason is that RBI repo rates have been all-time high as of December 2024. As you can see on my screen, they have been at 6.5% and very soon in February or March, Rate cuts will start, and when the repo rates come down, the fixed deposit rates are also likely to come down. So 2025 is the last chance where you can lock your FD interest rates. So before the FD rates come down, you can lock your FD rates between 7 to 9% by simply going to stable money platform. If you lock in your FD rates at the current interest rates, you won't need to worry about the changes in the RBI repo rate that might happen in the next couple of months. So investing in FDs in 2025 makes a lot of sense. The entire process of opening and breaking fixed deposits without needing a bank account has been made possible by stable money platform. In fact, on stable money platform, you will find FDs giving as high as 9% interest rates. For example, Northeast Small Finance Bank or Unity Small Finance Bank are offering interest rate as high as 9% for regular FDs. A few banks like Suryodaya Bank are also offering premature withdrawal as fast as 3 hours so that if you need money in emergencies, you have it there. Moreover, DICGC, which is a RBI subsidiary, gives your FDs an insurance of up to 5 lakh rupees per bank. Stable money is changing the way the FDs are opened and withdrawal in a safe, simple and secure way. Check out stable money platform and lock high interest FD rates before they come down. The link is in the description or in the pinned comments. With that, let's move to asset number 3, which is gold. Have a look at my screen and you will see the gold prices ranging from almost 1980s onwards, and there are strong patterns that we need to watch out for. Point number 1 you will note is whenever gold has given bull run. So for example, back in 79 or 80s, gold had a massive bull run. It came down immediately in the next 2 to 3 years of time. Again, if you see here, almost in 2003, gold started a mega bull run here and it lasted for almost 10 years up until 2011, 2012. And when gold started to drop all of a sudden again for the next 3 to 4 years. Finally, again, if you see 2019, we started to see bull run in gold, got consolidation again, and now gold is touching all-time high. So what we have noticed here is that gold bull run has been followed by a downturn in gold prices in almost all the bull runs that we have seen in the past. And secondly, there is a huge volatility if you see in these ups and downs. And if you're an investor in gold who only are having a time horizon of let's say 2 years or 3 years, just imagine if you end up investing somewhere at the top, you're going to lose money if you do that. Now, if you look at the last 20 years, we have seen this 10 years of bull run in gold prices between 2003 to 2012 almost. After that, 4 years of consolidation in gold prices remain almost flat, not huge movement. And now we are seeing the bull run in gold in the last 5 years post-COVID, where the gold prices are continuously going up. What should be our strategy in such cases? The $1 million question we have is how the gold is going to behave in 2025. I've been reading a lot of news articles and some of them have been suggesting that gold might hit 90,000 in 2025. Again, these are all speculation, but I really want you to understand what is driving this massive bull run in gold right now. And the main reason is that central banks across the world have been buying gold hugely. Have a look at this data. This is showing you data as of November 2024. You will note that Poland is #1 country that has been hugely buying gold, followed by Turkey, India, China. You will see majority of countries are hugely buying gold. Central banks are buying gold. Why? Because there is uncertainty in the global world right now. Trump is racking this entire world in terms of import tariffs. There is likely to be a trade war coming up and gold is seen as a safe haven. Therefore, the chances in 2025 is that gold is likely to remain in the bull run. Again, I'm not saying that go and invest in gold, but you need to understand what is driving the gold prices. Mainly, it is the central banks buying across the globe that is taking the gold prices to new highs. So what should be our strategy, Rahul, in such cases? I'll give you 4 hypercritical points about gold investing. Number 1 is gold in your portfolio needs to be there from a hedging perspective. But in my view, allocating more than 20% of your portfolio in gold is a big no. It should be lower than 20%. Point number 2 is that do not invest in gold only for short term. The chances of losing money is more. Make sure you're looking gold as a long-term investment, maybe for your kids, maybe for your grandkids. You have to look at gold as a long-term asset that can generate wealth over the generations, not in just few years. Third critical point in buying gold is always do SIPs, and the best instrument in my view for gold is gold ETFs. I've created 2 videos on my channel. Please go and watch those videos. I've gone through nitty-gritties of gold ETFs. You are going to learn a lot. They're still on the channel. Please go and watch those videos if you want to understand exact details of gold ETFs. I hope this gives you a broader view on gold investing. Please do not take that as a recommendation, but I have given you some data-backed analysis. If you're so far liking this video, request you to hit the like button. Let me know in the comments, simple thank you. It motivates me to bring such content to you at zero cost. Also, you can consider subscribing to my YouTube member community. Almost on a daily basis, I speak about various assets in a practical way so that you gain insights almost on a daily basis and become a better long-term investor. The feedback of this community has been excellent. Simply go to my channel, press on join button, or you will find the link in the description or in the pinned comments. With that, let's move to asset number 4, which is mutual funds. So if you're a mutual fund investor and are confused, let me now simply break down my strategy that I feel is likely to work in 2025. In fact, I created 2 videos where I covered a lot of details about these mutual funds. You can go and watch these videos. I'll give you the link in the description or in the pinned comment. But let me try to give you 1 minute or 2 minutes of commentary on mutual funds. The first point is that what type of investor you are. So there are broadly 4 types of investor. Number 1 is conservative, number 2 is balanced, and number 3 is aggressive, and finally ultra aggressive. I've created these 2 videos covering conservative, balanced, and aggressive investors. Let me give you summary of those. Number 1 is conservative investors. So for conservative investors, in my view, debt mutual funds or fixed deposits are good options, because conservative investors are those investors who do not want to lose money, who do not have risk appetite, who do not like volatility and all of a sudden the stock market is down, all of a sudden stock market is up. They do not want to see that. In that case, debt mutual funds, FD, are your best friends. But if you're okay with risk and volatility, comes investor type number 2, which is the balanced investor. So in my view, for balanced investors, good option in 2025 are multi-cap mutual funds, flexi cap mutual funds, and Nifty 50 simple index mutual funds that are going to be better in terms of the risk and reward ratio. Again, I've given a lot of details on these videos where you can go and watch that, but this is the summary that I'm presenting you. But if you're okay to even take higher risk and are okay with 20%, 25% sort of a volatility, then you are aggressive investor. And in my view, for aggressive investors, good options are Nifty small cap 250 quality 50 index mutual funds, number 1. Number 2 is Nifty micro cap 250 index. That is a very good option in my view. And number 3 is considering Nifty next 50 in the large cap space. Again, I've gone through a lot of details in terms of their valuations, in terms of how these mutual funds actually work, what are their expense ratios, what are their past returns, what are the exit loads, and many other details. I would highly request you to go and watch the detailed video, because unless you understand the details, you are simply gambling your money. I would highly request you to go and watch those videos. Ultra aggressive investors, I have not yet created a video. If I find time and if there is a demand, I will definitely do that in the next coming weeks. Moving on to 5th asset, which is US stock market and what is likely to happen in US stock market. If you look at this chart, you will note that in 2020 and 2021, Nasdaq really rallied like anything. We saw a bull run in US stock market. In 2022, it started to come down, followed by again bull run in 2023 and 2024. What is likely to happen in 2025? We don't know. A lot of things are uncertain because of what Trump is trying to do in US. But one thing is very crucial from Indian investors' perspective. Have a look at this chart and you will see how Indian rupee has been depreciating over the last 10 to 12 years, and in 2025 there has been a sharp depreciation of Indian currency, and that is very good for Indian investors who invest in the US market because of a concept called dollar hedge. The simple explanation of dollar hedge is that, let's say right now $1 is equal to 86 rupees, and let's say you buy a US stock which is $1, which is 86 rupees. Next year, if the rupee depreciate by 90 rupees, even though this stock may not give you any return, if you sell this one stock next year, you are going to get 90 rupees back. You've got 4% appreciation on your stock price automatically because of rupee depreciation. Now, I'm not saying that rupee will depreciate further or not, but right now US dollar is looking very strong. RBI is continuously monitoring and intervening to make sure that rupee does not fall more. But the last 20 years of data is telling us that constantly rupee is depreciating. And also, if you get better returns from US stock market, so rupee depreciation plus the US stock market returns might be a very good diversification opportunity in my view in 2025. So here are 2 to 3 critical points about US stock market that you need to understand. Point number 1 is, in my view, allocating more than 20% of your portfolio to US stock market is dangerous unless you really understand how the US stock market is run. Please don't do that. That's a big mistake in my view. Number 2 is start looking at simpler indexes to start with. For example, Nasdaq, Dow Jones, S&P. I had created a video on my channel on Nasdaq index, explained a lot of details about this index. That video is still on the channel. Please go and watch that video. You are going to learn a lot about Nasdaq index. Point number 3 is there are Indian based ETFs. For example, Motilal Oswal's Nasdaq 100 ETF, Motilal Oswal Nasdaq 50 ETF. Although these ETFs have stopped taking fresh investments, fresh SIP investments, but you can still go and trade on those ETFs. They're still live ETFs that are out there. The only big thing you need to consider is that the difference between the INAV, which is the indicative NAV value of these ETF, versus the current price of these ETFs. Let me quickly show you what I mean by that. So if you go to Zerodha or any other broker, you will simply go and search for MON 100. Motilal Oswal Nasdaq 100 ETF. For example, here on 28th of January, you see the price of this ETF is at around 208. I don't know when you're watching this video, the price may differ. Therefore, please go and check the latest prices. But let's say for example purposes, this ETF is available at 208. Now what you do is go and type MON 100 INAV. This is going to give you indicative net asset value. And on 28th of January, it is showing me a value of 181. So it means that the ETF is trading at around 208, which is very, very high as compared to its indicative net asset value, which is only 181. Almost 15% premium these ETFs are trading because of the demand and supply gap, because these ETFs are not creating additional ETF units. Therefore, if you want to invest, you have to go and trade it on the exchange, and therefore they are trading at a premium right now. So whenever you plan to invest in US stock market using these ETFs, please go and compare the INAV and the actual price, and depending on the premium or the discount, you can go and take your bets. Also, if you want to invest in specific themes in US, for example AI theme, I had created a separate video on that. It is still out there on the channels. Go and watch that video. You're going to learn a lot. I'll give you all these links in the pinned comment and in the description. Lastly, do not forget to check out Stable Money platform, a wonderful platform for fixed deposits. Lock your high FD rates now before they start coming down. I hope you thoroughly enjoyed this video. If you did, press the like button. Let me know in the comments a simple thank you. I hope to see you in my next video. Until then, keep rocking.